Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO Adam Holland and Group Finance Director Will Wilkins of Mpac, a global high-speed packaging and factory automation solutions group supplying healthcare, food and beverage, and the energy sectors. So welcome, gents.
Hi, Paul. Nice to be with you.
Yeah, well, big congrats on today's inline and record 2024 results, with sales increasing 7% to 122 million pounds and adjusted EPS coming in just over 35p per share. But before we sort of run through the details there, Adam, I don't suppose you could just quickly remind investors exactly what the company does, its USPs, particularly after such a transformational year for the group.
Yeah. Oh, thank you, Paul. So, Mpac, we design, build, and service the machines that our customers use to assemble and package their products. And those are products that millions of people around the world depend on every day. As you say, our focus markets are food and beverage, which make up about 45% of our business. Healthcare makes up about 35% of our business. And then the balance are other kind of FMCG sectors making up the 20%. What does all that mean? Let me give you some examples of the kinds of machines that we provide. We make the machines that are used to put frozen ice cream bars into the cartons that you put in the freezer at home. Our machines actually assemble the disposable razor blade cartridges that you might use in the morning. We handle wet contact lenses straight off the autoclaves. Our machines convey and stack cases onto pallets for distribution. So, for example, a couple of weeks ago, I was at a snack food factory. They produce that from that one factory. They produce 127 snack food bags a second, and all of those go through cases that our machines put onto pallets for distribution from that factory. So that, the scale and performance of those machines is really something to see. Today, the business is about 1,100 people across the world. We operate from eight facilities. Three of those are in North America, and then the balance are in the UK, Europe, with a little bit in south of the border, south of the US, and in Asia. So we're a broad global business today.
Oh, brilliant. And then you last year in the second half, you did three pretty important acquisitions. I don't suppose you could just quickly talk us through the sort of the rationale of doing it, but more importantly, the integration, how they're progressing.
Yeah. They were substantial. So we really did transform the group last year. We bought three businesses. They were all around the strategy for the group, which is building out, if you imagine a customer's production line. The equipments that we provided previously were focused on what might be thought of as secondary packaging. So that's putting things into cardboard cartons or corrugated cardboard cases. And the assembly processes. I talked about kind of razor blade cartridges and wet contact lenses and so on. So assembling products. The three businesses we bought last year were the BCA business, Boston Conveyors and Automation. That business specializes in the handling of raw food. So the pick and place, sanitary, wash down, conveying. It's based in the US, in Boston, Massachusetts. A fantastic team there, just upstream of the kinds of equipments that we would provide in a customer's factory today. So now extending our lane. And at the other end of the factory, the palletizing and conveying of cases, I described that snack food factory. We bought the CSI business last year, a business headquartered in the Netherlands with facilities in Romania, Mexico, and across the rest of the world, service teams supporting worldwide. That business is kind of downstream from the secondary packaging machinery. And we bought a small but really interesting vision systems business, Saiga Vision, that specializes in the use of vision systems to manage quality and production outputs from factories. All three were transformational in their own way, and the early days of integration have gone really well. We're a few months on from the BCA acquisition. We're just a few weeks on from the CSI acquisition, but all of the acquired businesses are performing well, and they've completely changed the group. So Whereas before we might have said, for example, that our US market made up 45, 50% of everything we did. CSI were really strong in South America and Europe. So now today, this large group is more like 25, 30% selling into the US market. Complete change of our geographical footprint. And the other thing that's changed for me personally is, when I go and visit customers, we talk about cross-sell and synergies, in boardrooms and with investors. But what does that really mean? Last week I visited a whiskey bottling factory
Nice
in
job.
Scotland. It was fantastic, isn't it? You can't beat it. I went to see this particular business to talk about our Langen business, packaging machinery. But actually, we spent the majority of the time talking about the way that Cyger Vision systems could be used to improve automation on that particular whiskey line in the future. I went to a popcorn factory in the US a few weeks ago, a factory that produces 1 billion bags of microwave popcorn every year. I went again to talk about cartoning machines. We do a lot of the machines for their business come from us on the cartoning side of things. And they wanted to talk about how they could completely transform the end of line part of their business, rip out everything to do with the way they palletize those 1 billion bags of popcorn today, and do it in a much more efficient way in the future. So we spent most of the time talking about the CSI business. A little segue into how we could use vision-based AI systems to spot bad popcorn, so that people didn't have to sit on the line looking for bits of bad popcorn day in, day out. So look, for me, what's changed is the kind of the synergies piece. The opportunity to cross-sell is also really coming to life after these acquisitions. I know it's early days, but it's very encouraging.
Yeah. And presumably it's also given the business a lot of extra resilience, because you're now selling more equipment to more customers in different areas across the whole sort of product solution, right? From sort of like, the product being created to then put into a palletizer. So you've got less sort of dependence on one large order, presumably.
Yeah. When I first joined the group, we spent a lot of time talking about some of the challenges of being a relatively small business at the time, dealing with some pretty large orders. And how do you deal with that? Well, it's very simple. You grow scale. The scale smooths out the lumps. And last year we completely transformed the scale of the group. So it's made a big difference to the future.
Fantastic. Okay, then we'll just move into the financials. I suppose you could take us through the numbers. Really excellent and record set of figures there. Also talk a bit about the order book as well.
Sure. Thanks, Paul. You took the words out of my mouth. It was a really strong financial performance last year, and we're really pleased to be able to report results in line with market guidance. But I'll go through the financial highlights. We'll start with order intake. So order intake in the year was just under 120 million. It's 1% up on what was a really strong prior year. So a year of consolidating those prior gains and kicking on further. Revenue for the year was 122 million. You've mentioned earlier, 7% up on the prior year. And we're pleased to say that's 5 consecutive years of revenue growth and strong revenue growth year on year. So another really strong metrics. Moving on to order book, you've mentioned that. So the order book is 118.5 million. That's 63% up on the prior year, and includes the order books incorporated from CSI and BCA into our overall order book. And that gives us 55% coverage of our forecast revenue for 2025. So we start the year in a really strong position and with a good order book. If I move on to talk about margins and profitability, another strong metrics. So our gross profit margins have increased from 27.7% to 30.1%. That's off the back of a really strong half two for 2024. How do we deliver that? What's the driver to that improved margins? But a bit of it is mix, on project mix and sector mix. We're seeing strong growth in food and beverage and healthcare sectors in the second half of the year, which helps. But it's also just down to the fundamentals of good project execution, which helped to drive margins in the second half. And on an operating profit basis, underlying operating profit, that leaves us almost at 10% return on sales. So really strong year and good returns.
Yeah, and I just saw it in that mix of the revenue. original equipment revenue jumped by 11%. Presumably, this is a sort of like, again, a bit of a razor blade model, because you sell the equipment and somebody's got to service it. So presumably you're in a great position if this has a life of 5 or 10 years to service that extra equipment in their premises over the whole of its life.
Absolutely. So the install base is really critical to drive our recurring service revenue streams. So clearly a byproduct of getting these extra orders into our order book, revenue recognized, and projects into our customers' facilities and into their install base will absolutely correlate to future opportunities for our service business. So another strong dynamic of Mpac.
Yeah, and then just on the cash flow side, you ended the year with, I think it was net debt of £37.5 million. But obviously you've spent like, I don't know, $70 million or something last year. So
well, a little bit less than that, but yeah. Certainly, yeah, the net debt reflects the fact that we used a mix of both debt and equity to fund the CSI and BCA acquisitions. The comparator was a £2.1 million net cash in the prior year. But the net debt number is well within the covenants, and we're still forecasting significant deleverage of that net debt position during 2025.
Brilliant. Okay, then just switching now, Adam, to obviously all the turmoil that's been going off in the world with the Trump trade tariffs. How is the sort of the business being impacted, if at all, and also sort of like, the go forward sort of like approach of the business?
Yeah. Well, I suppose the first thing to start with is that the business that's reacting is the new business as a result of all these acquisitions last year. So, at the start of last year, half of our business was about the US market, and now it's down to kind of 25-30% as a result of the acquisitions we've made. So we're perhaps a little less exposed to the US than we were in previous years. And what we've seen in the first quarter of this year is that the rest of the world outside the US is kind of in line with expectations. It's performing as you might expect, as normal, as it were. The US has been slow. We've seen a pretty slow first quarter in the US. Customers are taking longer to make decisions, as you might expect. If I was an FMCG business trying to make a decision about a large capital investment today, I would probably take a little bit of time to make that decision, compared with the same time in the prior year. Well, it's probably important to say we haven't seen any cancellations of orders as a result of the tariffs that have been introduced and then changed and delayed and adjusted. We haven't seen any cancellations, and that's really positive. And if I look ahead to where we might be going, I'm not particularly concerned about the suggestions of some analysts that the world might be moving towards a recession, that the US might be moving towards a recession. During a recession, we see an uptick in demand for frozen pizza lines, for lasagna lines, for all sorts of convenience foods, value-based food and beverage and healthcare demands. So, our business has been pretty resilient to recession. But in the change from one to another, as people slow down on the decision to invest in a new champagne bottling factory or something like that, we might see a slowdown in decision making. So there's definitely those effects going on. We are on track, to meet market guidance in 2025. So, the balance of all of those things, despite what's happening in the world, is that this business is still on track. And if I think about the long term, and I'm really interested in the long term effects of what's happening, forget the kind of noise. Let's look at where the world might be going. If Trump is successful in what he's setting out to do, to drive US domestic production, that has got to be a good news story for anybody involved in building factories inside the US. And that's what we do. If you're thinking about building a factory inside the US rather than in a lower cost labor base somewhere else in the world, then that's got to be doubly good news for anybody involved in automating new factories, because automation helps bring down the effective labor cost of a new factory. And a kind of icing on the cake, the triply good news would be, if you're a business involved in automation of factories for new product, new factories, and you have a footprint within the US, and of course, we do, that's got to be a good thing compared with businesses that operate outside the US only. So, when I look at the long term, I think this is probably a very good thing for Mpac. But in the meantime, as you say, there's some noise to work through, but we're on track to meet expectations.
Yeah. And just on that sort of competitive position there, Adam, in terms of your rivals, obviously some of the local domestic will have facilities in the States like you do. But there's quite a few, as if I remember rightly, there's quite a few in Europe who basically are quite big, Italy and Germany and people like that. What's the sort of competitive positioning?
Yeah. I mean, I feel sort of doubly blessed with the acquisitions we made last year. We didn't acquire with the kind of political changes in mind. None of us had that foresight, but we acquired with a really clear strategy about what we were trying to achieve with the long-term growth of the group. But we acquired a business inside the US with machining and assembly and engineering capabilities in Boston, and that gives us a really good base for expanding our capabilities in the US in the future. And we bought a business that is very strong in Europe and South America, and that balances out some of the effects that we're seeing in the US market. So, compared with that prior world, we've been very fortunate. We're in a great position today, and many of our largest competitors are uniquely based only in Europe in terms of their manufacturing footprint, or only within the US, and so they're exposed without that kind of hedging that we've got in our group, without the flexibility really. So it gives us more options for the future than perhaps businesses that we compete with.
Yeah, you're a bit modest there, Adam, because I think when I want to sort of pick my stocks, I'm going to have to give you my crystal ball and ask you the view of what's going to happen going forward, because you've done so well last year. Okay, Will, in terms of you mentioned there was 55% revenue cover for this year. Does that also include the service, the monthly? I can't remember how big is the service business? Because that's repeat revenue, isn't it?
It is. The current service business, around 25% of our overall revenue. Slightly different mix now. We've acquired CSI and BCA. But yeah, that order book and therefore the revenue cover for 25 includes everything that's in the order book at the end of the year. But clearly, as a shorter cycle service business means that will convert to revenue more rapidly during the course of the year as well.
So in theory, then, if I'm just sort of the 55% is the order book you can see, and assuming that the same sort of like patterns of repeat orders for that could potentially give you 25% of turnover for this year. Okay, so if you added those two together, it may give you an indication of where we are.
It gives context, yes, absolutely.
Okay, fantastic. Just Adam, in terms of sort of new products, you had a pretty busy year last year as well with your there's a couple of products that you launched. How are they sort of like being received by customers?
It was a big year. It was the first year of our kind of 5-year product roadmap in terms of launches of new products. It was interesting to see the Ostro launch. The Ostro was a new mid-range cartoner that we launched, slightly slower speed than the cartoners that we've operated in the past, and aimed at a different kind of market. It's gone really well. We've already taken orders for 4 Ostro units in the first few months of that product being available, and that is quick. And most importantly, that included a new customer for us that we've been trying to break into for quite some time in the bakery sector, which is a robust and growing part of the market. We wouldn't have been able to get in without that new product. It meets a need that nobody else in the market could meet, and that customer was looking for. So it was the entry ticket to breaking into that new customer. You might have seen that last week we've announced the launch of a new range of pizza cartoners. We've launched 3 new products: the Brisa pizza, the Maestro pizza, and the Maestro Pizza XL. And that was very, very deliberately timed and targeted, given where we think the world is going. Those new products are aimed at exactly the kinds of trends that we talked about earlier in this conversation. So we'll come back in September and talk to you a bit more about how those have gone in the months between now and then. And then the last piece I'll just touch on is digital. We've been working for quite some time around the way we provide digital support to customers in service. The Mpac Cube Connect has been a thing we've talked about for quite some time. Last year, we took the first 5 orders for the Mpac Cube Connect digital service, so that's gone really well. And I'm really encouraged by the progress the acquired businesses have made as well with the way that they support customers in the service world. Last year, CSI celebrated the 2024 Project of the Year, was a service project on the PLA part of the business, which is all about performance level agreements. So no longer just providing, a level of kind of parts supply and field service supply, but actually guaranteeing a level of performance from a factory line and then putting in place the service that achieves that guarantee. The team have achieved incredible levels of performance improvement with a particular customer, Walkers, in the UK. In the factory that they were looking to drive a substantial increase in performance from the Coventry plant. They've done a brilliant job there, and CSI were very happy to award Walkers the 2024 Project of the Year as a result. So some really nice examples of things that have gone very, very well last year as a result of work on innovation and new products.
I'll have to certainly gate crash one of your capital markets days. I want to try these, the whiskey, the popcorn, the crisps, the ice creams and the popcorn. That'll be fab. Something to look forward to. Okay, to switch gears now, Will, can you just a quick update on the pension, because it's quite an important announcement which came out earlier the year that you're looking now to take the pension to the next stage.
Yeah, huge announcement. For the first time, we're able to say we're in both an accounting and an actuarial surplus schemes. And for those who followed the company for some time, let's see what a significant change that's been to the dynamic of the pension scheme. So we're in a surplus, and a significant surplus, 21.1 million, funded to 108% now. So clearly, the company's now moving the focus towards working towards decoupling the pension scheme and taken off our balance sheet at the first opportunity. So we continue to work on that, and as there's more news, we'll be happy to share it at the first opportunity.
Fabulous. Okay, then Adam, if it's possible, just for sort of some closing remarks for shareholders in terms of the road ahead for the next, for the rest of the 2025.
Yeah. Thank you, Paul. I think what I'd say is 2024 was a transformational year for the group. It was a transformational year in terms of the scale, in terms of performance, and in terms of the leadership team that we brought forwards into 2025. And the outlook for 2025, I think Will's put it together really well. We started the year with a record order book, the best order book ever. Q1 order intake has been broadly in line, strong in the rest of the world, perhaps a bit slower in the US, but nevertheless, we've got a strong pipeline, and we're much less dependent on the US than we were previously. We're going to continue to monitor what's going on in the world, but at this time, we are on track to meet market guidance in 2025.
Brilliant. Okay, well, thanks a lot, gents, and look forward in catching up at the AGM sometime in the next few months, I guess. So well done.
Good.
Thanks a lot.
Thanks, Paul.
Thanks, Paul.